In the energy quadrant, taking a look at the September crude oil contract at the CME Group, down again now 4 consecutive sessions lower, working on its second down week in the last 4, closing at about 66.48, which was down about 1.2%. On the lows, 66.33. That was down 1.43% from yesterday's settlement. On the highs, we were actually up a little bit more than 0.5%, 64 basis points higher to 67.72. But we are now down over 13.5% since the July highs at 76.98, with these 4 consecutive down sessions putting an exclamation point on that number, well into correction territory for crude oil. Demand weakness is responsible. The speculative longs don't want to take positions here. Oil markets are responding to the spike in the Delta variant of the COVID-19 virus across the world, not just in the U.S., and we're seeing lower demand from China, a little bit of a spike in demand from India, but not enough to make up for the lowered travel demand, as you're seeing travel stocks being hit by that as well. So it's not just a crude oil story here. Perceived pandemic-related demand destruction is taking the longs out of the markets, not necessarily bringing shorts in, but that's some of the pressure we're seeing, is that weakened floor by longs not being in there. And then, of course, a headwind to all commodities is the dollar strength we're seeing, which could be perceived as a mini flight to safety, as we saw treasuries rise a little bit, but then we saw them pull back a little bit as well today. Mini flight to safety is pushing the dollar to the best day that it's had in 2 weeks, up 27 basis points versus the yen, 55 basis points versus the euro, and over 0.75% better against the British pound. So that dollar strength, a headwind to all commodities. Crude, no exception to that, finishing the day down almost 1.25% lower today.